To this topic, I'll be talking about the DXY, aka the US dollar, right? So if you're trying to trade any currencies or any commodities that have USD in front of them or at the end of them, make sure the first thing you should be doing is to analyze the DXY, which is the US dollar. Depends on the broker that you use. For some broker, it is called the DXY. For some other broker, it is called the USDX. There are very variations for it, but you'll be analyzing the US dollar prior to trading any currencies or commodities that have USD in front of them or USD at the end of them, such as if you're trading Euro USD, make sure you analyze the DXY first, right? If you're trading USD JPY, AUD USD, USD CAD, gold, XAUUSD, silver, XAGUSD, you name it. If you're trading any currencies or commodities that have USD in front of them or at the end of them, make sure you take the time to analyze the DXY first, right? So what the DXY is going to do is, if the DXY is trending up, any pairs that have USD at the end of them should be trending down, right? Let's say if the DXY is bullish, which means the DXY is going up, your USD should be going down, GBP USD should be going down, AUD USD should be going down, and so on and so on. And gold should be going down. Any pairs with USD in front of them, such as USD CAD, USD JPY, should be going in the same direction as the DXY, which means it should be going up as well, right? So make sure you take the time to analyze the DXY the same way you analyze any currencies or any commodities, right? Even Bitcoin, BTC, USD, make sure you analyze the DXY first, right? So what you need to do is, it depends on the broker that you're using, right? So I use Pure Prime and 8cap. These are the two brokers that I use. They're both regulated, right? Yet again, make sure you guys take the time to go over the beginner's guide, right? Make sure you guys sign up with the broker. PU Prime currently have a 100% deposit bonus going on, which means if you add 1,000, they'll match it. Obviously, it's not free money. They'll give you that 1,000 as credit, so you can trade that capital. So you can have more capital to trade with, so you can potentially make more money, right? So all the information is part of the beginner's guide. Make sure you guys take the time to go through it, right? So to find the DXY, the USDX, the US dollar, right? All you got to do is right click, right? If you're using MT4, right click symbols. If you're using MT5, you should see a plus button here so you can type it, right? Or but you can always do right click as well, symbols, and then go to, I believe, CFDs, right? You have the metals, that's where you find gold, silver, and so on and so on. CFDs, that's where you find NASDAQ, US 30, and stuff like that. I think you should be able to find the DXY. As you can see, it says USDX, which is the US dollar basket index, right? That's what you need. Double click on it, right? There we go. Now you can properly take your time to analyze the DXY, right? So guys, it is very, very, very crucial to analyze the DXY first, because that is going to give you an edge, right? If you get the DXY right, if the DXY is going in an uptrend, any pairs that have USD in front of them should be trending up as well. And any pairs that have USD at the end of them should be going the opposite way, right? So that's the DXY. As you guys can clearly see, right? Make sure you always go with the daily bias, which is with the daily trend, right? On the daily, the DXY is currently going down, which means the DXY is in a downtrend, aka bearish. So technically, any pairs that have USD in front of them should be going down in the same direction as the DXY, and any pairs that have USD at the end of them should be going the opposite way, which means they should be going up, right? So you're going to take your time to analyze the DXY the same way you'd analyze any currencies, any commodities, or any crypto before you place a trade. I mainly go with the daily bias, right? If the daily is going down, I'll be looking for sales. If the daily is going up, I'll be looking for buys. As you can see, the daily is currently in a downtrend, right? You can grab your trend line if you're unsure, grab your trend line, drag it all the way down. You can clearly see the DXY is trending down, right? In a downtrend, guys, what do you get? You get lower highs and lower lows. If you zoom in a little bit, right, you can start placing your key structures, right? You can grab your rectangle box, right? So place this one as a high, right? Place this one as a low, right? We'll place this one as a lower high. And how do you know when to sell it? Or precisely, how do you know when the lower high is going to be created, right? As soon as the market gives you a high and it dumped, and as soon as you see it retracing, all you got to do is grab your fib retracement, right? Go and insert, grab your fib retracement levels, place it from the high all the way to the low. And the lower high should be created between the 50% and the 61% level. As you can see, the market went all the way up to create the lower high at the 50% level, right? So that is a lower high. Obviously, guys, you're not supposed to trade the DXY. You only take the time to analyze it so you can use it as a confirmation, aka a confluence. So you can go ahead and trade the USD pair that you're trying to trade. Doesn't matter if it's gold, doesn't matter if it's USD JPY, doesn't matter if it's AUD USD, and so on and so on, right? So in a downtrend, guys, you get a high, low, lower high, and the next thing you should get after a lower high is a lower low, right? This guy is lower than the previous low, which makes it a lower low. And same thing again, guys. If you grab your fib, right? Let's say from the most recent lower high to the most recent lower low. As you can see, the market went all the way up to the 61% level to give you a what, guys? To give you another lower high, right? So you can clearly see that the DXY is in a downtrend and so on and so on. Then after the most recent lower high, went all the way down to give you another lower low, right? So now it is retracing back up. So now you're going to do the same thing again, over and over again, right? You can place your retracement level, right? Grab your fib retracement, place it from the most recent lower high to the most recent lower low, and technically the DXY should be creating another lower high at the 61% level for it to keep on selling, right? The way I trade, guys, is very, 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 very simple. I trade with the trade at all times, right? If it's in a downtrend, right, I'm only looking for sales. If it is in an uptrend, I'm only looking for buys, right? I mentioned in the previous videos, guys, never, ever, ever go against the trend because you do not have enough capital for you to place a buy in a downtrend for the market to start buying, right? So not interested in buying because if you buy, that is very risky. That is you going against the trend, and that is you trying to time the retracement. All you got to do is wait for the market to go up to create the structure, right, at between the 50 and 61% level. And then once it does that, you can start selling it for it to keep going down to create the next lower high, something lower than the previous guy, something lower than this guy right here, right? So now, since we've confirmed that the DXY is in a downtrend, I'm going to grab a USD pair to show you guys that this method actually works, right? Always analyze the DXY first, the USDX, before you go trade any pairs that have USD in front of them or at the end of them. I'm going to grab your USD because that's one of my favorite pair to trade, right? So the DXY is currently in a downtrend, guys, which means your USD should be trending up, which is the opposite. Remember, guys, if the DXY is trending down, right, your USD, since he has USD at the end of it, should be moving the opposite way, which is in an uptrend, right? So your USD should be going up, GBP USD should be going up, and so on and so on. And USD JPY, USD CAD should be trending down, should be going in the same direction as the DXY, right? So I'm going to grab your USD, there we go, this one right here. As you can see, guys, your USD is trending up, right? Like I said, you can easily use the DXY as a confirmation, aka a confluence, right? So I'm going to get rid of everything right here. But you guys can clearly see that your USD is giving you the opposite structure compared to the DXY. It is going up. And in the uptrend, guys, you get what? You get higher lows and higher highs, which is the opposite structure, right? And in uptrend, guys, you get higher lows and higher highs. As you can see, the DXY is trending up. If you zoom in a little bit more, all you got to do is start placing your key structures, right? So you're going to start right here, got your rectangle box, right? You have a low, right? The market went all the way up to give you a high, right? Then went all the way down to give you a higher low, right? Remember, guys, if the market is trending up, you're going to get higher lows and higher highs, and your only job to do is to buy at the higher low, right? If you grab your fib, right, place it from the most recent low, right, all the way to the high, right? You're going to start it at the 100% all the way to the and stop it at the 0%. As you can see, the market went all the way down to give you that higher low between the 50 and 61% level, then went all the way up to create your what, guys? To create a higher high, right? If the market is truly trending up, you should get something higher than the previous high, which is going to be a higher high right here, right? And it went all the way down to give you a higher low, right? Now, all you got to do is, right, went all the way up to give you another higher high. Now, all you got to do is grab your fib, place it from the most recent higher low to the most recent higher high, right? And then you're going to wait for the market to drop between the 50 and 61% level for you to start looking for buys. right? Yet again, guys, you do not place the buy on the daily time frame. You have to scale down to the 4 and 1 hour time frame to place the buy, right? I'm going to go over that in the next videos as well, but I'm just giving you guys a general idea on how you can use the DXY as a tool, as a confluence to help you to even give you a better edge in the market, right? So all you gotta do is wait for the market to drop to give you the higher low. Then you can start looking for buys and you can ride it all the way up, right? And then if the market is truly trending up, you should also get something higher than the previous high, which is going to be a higher high, right? That is how you can use the DXY, guys, right? If the DXY is trending down, your USD should be going up because you have USD at the end of the euro currency, and GBP USD should be going up. And if the DXY is going down, and if the DXY is going down, USD JPY should be going down, USD CAD should be going down, and gold should be going up because gold is XAUUSD. Right? If you zoom all the way out, you can clearly see that gold is in an uptrend, right? Gold is giving you the opposite structure, which is a low, high, higher low, equal high, and a higher low, right? So it is a very, very simple concept, but trust me, it is going to take your trading game to the next level. So I just wanted to touch base on the DXY and make sure you guys always analyze it first before you trade any pairs, any currencies, any commodities, any indices that have USD at the end or in front of them. So please take the time to go and backtest it for yourself, and you're going to see that it is going to work for you as well, right? And that is it for this video, guys. I'll catch you guys in the next one.